Welcome to China Crossroads TV. Today we're going to talk about Chinese capital markets, investment, and more importantly, if foreign investors are leaving China, decoupling, de-risking, and so forth. Today we're talking with Ben Wu and Daniel Senger, two experts in the field. So let's jump right in. Daniel and Ben, I got already a question for you guys. Lately, there's a lot of talk about like money leaving China because the Chinese economy is not doing well and so forth. There's talk about de-risking and so forth. Is that the whole picture? Is money really leaving China, or is it like a very nuanced picture?
Well, I would, of course, some money is leaving China, but most of that is really, and the money that is leaving China is private companies, private Chinese companies setting up businesses in Southeast Asia, in the US, elsewhere, Europe even increasingly. A lot of that, though, is very low profile. It's not advertised. You only see it once it's announced.
Yeah, I think when you look at maybe healthcare sector, you look at the foreign direct investment into innovative healthcare, innovative drug development, there was a 36% decrease compared to a year ago. But you take a long view, compare that to 2013, there was 1,000-fold bigger than 2013. So I think it depends on the long view or the short view. We are in the midst of a down cycle, so this is natural, this is global. And then the market's changing, there's plenty of dynamics going on. The market become more competitive, probably more difficult for some of the companies. So they are rethinking about their strategic investment. So I think this is partly global, partly changing dynamics, but it's true. But the impact depends on whether you look at it as in a short-term view or a longer-term view.
Is it then also true that, I mean, we read all the stories about foreign investors, PE funds not investing in China, withdrawing capital. There were stories about they couldn't get their money out. Is that all part of this whole global picture, that they're looking for better opportunities all over the world, or is it a very particular China issue?
Well, I see, again, there's a lot of misperception of what's going on. Clearly, the capital market system is clogged up. The VC, the PE, the listing to the markets has all slowed down. You see the FDI, some of it showing negative, but a lot of that has been due to redemptions, people moving money out. So it shows that the process is working. Okay, historic low in FDI, but there's a factor of people dividending monies back offshore as well. And it's just 1 year so far, so we don't know what it's going to look like going forward. We're pretty confident that there's a lot of corporate interest from Europe and North America to suggest that.
So you think that this is just a short-term cycle, that maybe next year will be different? Because it is very true, companies are still investing in China, but often I think they're not always talking about it that much.
Indeed. So right now, we have to take last year in perspective. It was a shock. From 2022, and that 2-month lockdown surprised a lot of companies, and that was reflected in 2023 investments. However, if you look at all the discussions going on by corporates right now, it's pretty active. The difference is, especially for Americans, they can't tell Washington that they're looking at increased investments in China. And of course, it's not like the boom years of the past where you had a lot of serious CapEx. You have more research-oriented, smaller deals that we see out there. But again, US and European corporates have a tendency to be stealth right now.
Yeah, I think it's true. Like short term, this is still, we're talking about capital market. Capital market talks about exit opportunities, right? So you look at the IPOs this year, definitely down significantly. There are some companies who are preparing for IPO, have pulled out of IPOs. So this has a significant impact on the capital and on the LP where they get the capital from. So the LPs have lost a lot of money, more difficult to raise funds, and hence more difficult for them to invest in new ventures. I think this is a cycle. This is normal for down cycle. But again, if you look longer term view, like China is, at least for pharmaceutical market, it's the second biggest pharmaceutical market in the world. Which company can not go to that population? So I would take a longer term view that I think it will come back. It may come back in a different form and with a different focus, but it will be there.
And if I could add to that, there is the new chairman of the CSRC. He's doing some very impressive fundamental changes to the market. He's looking at the quality of the accounts. He's looking at delisting deadbeat companies. He's looking at the mechanics of the IPO process. So it's going to take a lot of fundamental rework of the financial infrastructure, but he seems to be doing all the right things to make it work.
Yeah, I think that's a good point. We learned from the last cycle. Like, so for example, the Hong Kong 18A was the first time the Hong Kong Exchange has developed this opportunity for pre-revenue companies to list. And then I think the last bubble have showed them that there are problems and I think capital security for investors that they need to look out for. So in the second round, it will be better. So I think there's also this learning process going on in Hong Kong, and also I think maybe also in other exchanges in China as well.
So this means basically that China, of course, has opened up for 40 years, but I say capital markets are relatively young in China and immature compared to the Western world. Is this a learning process, or do you think the government is screwing it up in somehow? Like they just don't know what they're doing, basically?
Well, like you said, this is a young market. Okay, I've been in capital markets longer than China has been in the capital markets, at least new China. It's only really started in 1990. And they're learning. Plus, China prioritized other areas before the capital markets. They were prioritizing manufacturing, first basic manufacturing, now high-end manufacturing. Now they're looking at how do you facilitate bringing capital and ideas together to create a market, I think.
Right. In the last boom, when everything it has to move fast, people make mistakes and people just jump into things with big investments into companies that are not so ready. So I think this is a learning process. We have seen that in the US and other more mature markets many times. This may be the first time in a big way for China, and it will get better. There will be more control, and the investors will become more mature. I think the way they think about return on investment will be different. So I think over long term, I'm still confident about the market.
So then if you guys are confident about the market, which sectors tend to be still positive? I mean, BASF is kind of structurally de-investing from Europe and is investing in China. They announced 2 years ago a huge investment of $10 billion over the next so many years in China. You have AstraZeneca, who has 4 global R&D centers investing massively in China. You have Volkswagen needs to invest in Chinese EV cars just to keep up with the market. So what is these guys, in certain sectors things are happening and they need to be here. In other sectors, I can imagine real estate is like, yeah, well, we're not going to invest in China. So what works? Which sector is good? Which sector is like, well, forget about it?
Well, the world seems to be transfixed on the big three EVs, batteries, and solar right now, and how it's dominating the market. Some people may complain that there's overcapacity, but there's a lot of data that would contest that statistic. The fact is, China rules those 3 categories from the last 15 years of R&D and now putting those ideas to work. Going forward, biotech is clearly on our list. It's very important. And then chemicals in our view, but we can talk about that.
I think I would argue that most of the industry is still a huge market with huge demand, no matter how you look at it. But the competition's been different. The competition is going to be more tough. Like the consumer is going to demand higher end products, more sophisticated product, more differentiated product at a lower price. So this is not different from any other market. When you want to be competitive, I think when you look at maybe 20 years ago, you can just produce a product, send to China, sell it in China, right? Right now, maybe that's not so easy. You have to adapt your product. You have to adapt to the market interest. You also have to adapt to the significantly increased competition within China. So growth is still there, opportunity is still there, but you can say that the low-hanging fruit's gone. It's going to be more difficult, but the opportunity is definitely still there.
And thinking of Ben's world and pharma and biotech, the West really never solved the patent cliff. So there's a lot of new ideas that need to be brought to the table. Before the trade friction between the US and China, there was an active, a lot of ideas going back and forth and drug discoveries in the process. I hope that continues or starts up again. Otherwise, I can see a lot of those ideas from China going to places like UK and Europe, unfortunately. But there's clearly a lot of scientists in China that are going to make that happen one way or another.
Yes. So in this way, actually, the decoupling or de-risking between US and China, a lot of Chinese scientists actually now want to go back to China because they don't feel welcome in the US. A lot of money might also actually return to China, maybe, because these people are coming back. That creates opportunities. Is that a long-term a good thing for China or a bad thing?
I think again, I'm thinking about a practitioner of biotech industry, but I see a lot of great things happening about cross-fertilization, where you have ideas, where you have Chinese scientists in China, Chinese scientists in the US, and they're discovering things. I always joke that it's in Chinese, and those are great ideas because they come from different backgrounds. The Chinese tend to be just pure researchers. In the US, sometimes you have a PhD in small molecule research, and it goes on to get their MBA or brings in a physician and commercializes it. Those are kind of practical links that I think come together in a powerful way. I'm not sure what you've seen.
Yeah, I think that the value chain is so integrated. It's very difficult to practically think about decoupling or de-risking or whatever you call it. I give you an example. I think if you go back to, I'm thinking of my early days in the university in pharmaceuticals. We used to make tablets, right? So when you make a tablet, you started with chemicals. So we're talking about chemical industry supplying the basic chemicals. And then the basic chemicals becomes intermediary chemicals. And then it becomes API, the active pharmaceutical ingredients. And then you add excipients. Then you put it together, put the tablet together, it becomes a product. 80% of the world's API, it's dominated by India and China. All right, so the science is focusing on the compound, but the actual making of it depends on many other countries contributing their efforts, their supply chain, their capabilities. So decoupling becomes actually, I don't know, is it even realistic or not?
Yeah. No. Let's move back a bit towards the capital markets. I think maybe a split, not a big word, but a kind of a shock was the non-IPO of Alipay from Alibaba and Jack Ma. And then the whole story Jack Ma, where there were a lot of people in the media said, oh, he's in prison and this and that, and probably just had to keep a low profile, low key. But I think for many investors it was like, this return on investment is going to be not as good anymore. The government will scrutinize a lot of things. We can't grow that high. What do you think the sentiment among Chinese investors at the moment is regarding everything that's happening in geopolitical space, in the politics in China and so forth?
Well, Jack Ma and the whole, misinformation, disinformation, whatever you want to call it. Yes, I mean, I personally think that Jack Ma got out of his lane. He was trying to be a rock star. He was trying to be an American-style, very popular person, and that kind of crossed a few tripwires. However, I think Beijing is realizing they've also overextended, whether it was the big tech platform crackdown, the ed tech crackdown, the fintech stuff. Beijing has a clumsy way of implementing rules. But going forward, I truly believe that Beijing knows they need to lubricate the system and bring capital to ideas in the Chinese ecosystem. They got to figure that out. So it's quite exciting time.
And can Beijing do that? Because, I mean, there's a criticism that Chinese can't innovate because it's all controlled by the government, all these kind of things.
I find that very hard to believe. Yes, I've been here for nearly 20 years, and I used to joke about the smartphones or EVs or poor quality cars. I don't say that anymore in the electronics industry. In biotech, I've seen amazing discoveries going on that Ben will know 10 times, 100 times more than I know. So no, you're going to be, what you'll find is, if you look at one measure, if you look at the Nature Index and look at how many scientists have come up the rankings, okay, they're doing basic research. Now they're increasingly doing value add. Now, this is not something for Beijing to directly dictate, but it's something to allow enough latitude, enough freedom to go ahead and be innovative. And I think Beijing is learning that lesson.
Yeah, I think if you look at the facts in the last few years, a lot has happened to the innovative industry, let's say biotech. In China, we used to, many years ago, just producing generics. Last year, we have more out licensing in China than in licensing from outside of China. And last December, Novartis made a large acquisition. It was the first M&A deal from a big pharma to buy into a Chinese grown biotech. So I think China has grown a lot and it's keep changing. It's reinventing itself every few years. So that's going to continue no matter what that economic cycle looks like. So I think that's going to continue, right? There will be bumps and there will be learning curves and there will be people losing money or people making money in between, but it will still continue. And the way it is now, I think China is reaching a space where it has to be globally competitive. Right? So in China for China is probably not good enough. In China for global is where it wants to go. But when you reach that level, the competition, the requirement has to be top notch because the whole world is your competitor. So I think China is going that direction, requires a lot of help from everybody, but it's going to get there, I think.
But China doesn't have a real NASDAQ like the US has. And even in Europe, every self-respecting European scale-up startup wants to have a NASDAQ listing. Euronext is maybe second hand, I would say. I mean, still NASDAQ is where all the money is. China doesn't have, if they want to build a NASDAQ, they're building one, but they don't have it. So eventually, for any really good Chinese company, America is still the place to go. And then they need to have access to American capital. Does that put limitations on the way that Chinese companies really can move forward internationally?
It does in many ways, but they're trying. First it was Chinex and Shenzhen, and then there was the Beijing exchange, and they've come up with other vehicles. Hong Kong has tried to be the biotech or center for startups that have low or non-existent revenues, and that hasn't materialized yet. But I think it goes back to the fundamental accounting and the legal structure. We know that China won't have an English common law system, but they're trying to improve on the Chinese civil legal system to give protections to the development. It's going to take time. There's simply too much capital out there. Since the housing crisis, there is anticipated between US dollar equivalent, 18 to 24 trillion dollars that's going to flow into the capital markets in the next 10 years. Where is that going to go? It needs to find a home. So bringing that into the capital markets to go into companies to grow, whether it's VC, PE, listings, the whole ecosystem. There could be, if China gets it right, and they just need to get it a little right, it's going to be an incredibly dynamic environment.
Right. I think it's just the scale that we're talking about in China. We are in a down cycle. Therefore, we have this question. And in the last cycle, in the last few years, we have learned a lot. And you look at all the exchanges, the rules keep reinventing itself to become better. Right. So I think over long term, China is not quite there. It's not yet the NASDAQ, but it's working on it.
But all that money has to go somewhere. It won't go to real estate anymore. It might go to chemicals, EVs, batteries, whatever it is, but it has to go somewhere. So what would you rank the 5 top? If I would be a foreign investor and say, I'm going to put my money in China, what would be the 5 sectors that you think, let's invest there, let's say broadly?
Well, let's see if I can make it's first biotech. But it's also in chemicals. I would argue from our previous research that chemicals, forget about EVs, batteries, and solar. Chemicals is going to be the thing that's going to shake the world.
Why chemicals?
Why chemicals? Because they put a lot of work into doing chemical R&D in China. They look at chemicals as part of new materials, and everything in the EVs, batteries, and solar requires new materials based on chemicals. They simply made an agenda. If you look at the past 15 years, China's been responsible for about over 50% of all the capex in the chemical industry. They're building more capacity now than all of Europe has in the chemical industry. And then you see that in the BASF, 10 billion euros. And then you see ExxonMobil, largest investment outside of the US, 10 billion US. And you have a slew of others. Last year alone, as much as we talk about the downturn in FDI, there was something like 60 deals from foreigners doing FDI deals in chemicals, 10 in M&A. So 70 transactions happen in a market that's everybody complains that no FDIs happen. But most of those are not big ticket items. They're not multi-billion dollar items. They are 30 million, 100 million. They are in focused R&D. So we look at it as a lot of foreigners are coming to China to tap the scientists to develop things. And then biotech, a lot of biotech is looking to collaborate, whether it's FDI trials or whatever, FDA trials and such. But that's, again, something that's become way too complicated.
Yeah, well, I think when you look at China, the next 10 years, more industry is going to be able to produce products that are at global standards, that are competitive globally, that's going out of China. Now, China has not been exporting a lot of its service industry, right? So I think in the next 10 years, it's still going to be product driven. Service is going to come later on. Brand building is also something that China is working on, but it's not quite there yet. So if you go back to the drug industry, yes, we are doing more out licensing. Products are being produced at a global standard. But the ability to sell offshores, right, to set up global conglomerate companies, China still has some way to go. So I think these industries we're talking about, I think healthcare, biotech is definitely there. EV is going to be there. So in the next 10 years, it's still going to be these major industry. But even further out, it will be, I think, more brand building, more service industry, and so forth.
Yeah. When you talk to foreign investor companies, very often I think you hear two questions. First of all, if we invest in China, how can we get our money out? Second question is like, okay, if we work with Chinese investors or companies, how do you know there's no relation to the Chinese Communist Party? Because that's the two major fears. That's what I always hear.
Well, I think, if anything, the recent law in FDI has encouraged Beijing to make the rules more black and white. It'll never be completely black and white, but enough to encourage companies to dividend some of their profits back to their home base. So should alleviate. If anything, it's become a big boy game. So the larger companies know how to set up the proper legal structure and dividending process from treasury operations, moving cash offshore.
So it is possible to repatriate your money, basically.
Right.
Because that's a common misconception, I think.
Yes. It really goes back to the middle and smaller companies. They set up stuff being very naive, thinking that they'd always change the rules later. And then they got locked into a legal structure that doesn't provide for dividending.
Yeah, I completely agree. I think that's the more experienced company, the bigger company already know how to do it. So they do it through different kind of financial structuring. Smaller companies still struggling on those same issues. So, but I think that's short term. Right? Over long term, I think a lot more reforms is going to come for China's economy to be more integrated globally. So that's more long term. But short term, I think big companies do not have a problem with that. It's only small companies trying to learn.
If I would be a Western company and I would do a deal with a big Chinese state-owned company, which is of course government controlled in many ways, should I be afraid of anything? Or is that overreaction?
It depends on the circumstances. You have to be always be paranoid about these things. It's a good way of always doing your due diligence about what could go wrong. But having said that, it's not nearly as bad as people think. It is more of a second and third tiered city issue with an SOE than it is in the major metropolitan areas. But Beijing actually realizes they're not sure how to control the various provinces and stuff. But they're real. It's real. But overall, when you're on the ground working with, I prefer working with Chinese private companies, and we can go back to the party sales, but they're very dynamic. But even in the big pharma, some of these SOEs are fairly pragmatic. So, and when it comes around to your earlier question about everything's related to the China Communist Party, well, yes, I mean, but it's always been there in some form. If you set up as a foreigner, set up a company and you hire, you get to your 25th employee, you need to have a party rep. It's always been there. Yeah. It's just been lightly in. Now they're enforcing it some more, but if you have a friendly party rep, then everything should be fine. When I'm advising a foreign client acquiring a company in China, that's one of the first things. I look at the quality of CFO and HR department, and then who is the party rep? I really want to know and see if they're friendly. And this is just practical matters you have to work with. At the end of the day, I'm not a PRC national, but most of the PRC nationals I talk to, they say it's something that can be managed.
Yes, understood. Well, it seems the big multinationals, they tap into Chinese capital, government capital all the time. I mean, AstraZeneca's done it many times. I mean, they don't seem to have any problems with that at all, right?
Right.
So they understand the risk and, of course, also the advantage of the whole system, I assume.
So I think it depends on what you think, what do you mean by afraid, or what's the risk. You could be looking at a European or American company offshore who wanted to eventually go IPO in NASDAQ, and having a potential partner or investor with Chinese government roots or investments in the subsidiary could become an image problem. So I think this is realized, that this is pretty real to those companies, and this is something they need to consider. But I think I agree with you. I mean, in practical sense, when you operate in China, that actually doesn't really impact anything.
Okay. Right. One last question, because time is running out. What about Hong Kong? Used to be the gateway to China, financial center, and so forth. The last few years, a lot of bad news about that. Hong Kong is becoming a new China, and so forth. Has Hong Kong a future? Is it alive and kicking?
Hong Kong has a great future, but it's going to be re-imaged in a different way. If I look at Hong Kong when I first lived there in the early 1990s, it was an old-fashioned broker network, and it became over-financialized. Now, Hong Kong combined with the Greater Bay concept, fusing Hong Kong with Shenzhen, Guangzhou, and other areas, it can have some really interesting points. Plus, we hear, when talking to officials in Beijing, the security regulators, they very much need the English common law. Whether it's for derivatives or structured products, financing, workouts and stuff, that is something that can't be replaced. And that's not coming from me, it's coming from some pretty senior people in Beijing that recognizes that. So it's a very different market going forward.
Yeah, I agree.
Ben, you're from Hong Kong. What's your point of view?
I think my point of view is that Hong Kong still has something that's difficult to replace. It still has a different legal system, independent legal system. It still has an independent currency. So even though we're talking about integrating, there's still advantages or differentiation where Hong Kong still stands and still has an important position in China going forward. So it has reinvented itself many times since the 60s, starting out as a place for manufacturing, and then it becomes a financial hub, and it has to play different roles as the world around China, world around Hong Kong changes over time. So, but I still think with the talent in Hong Kong, with the currency differentiation, the legal differentiation, and also the more global international mindsets, Hong Kong still has a good opportunity.
All right. Okay, unfortunately our time is up already, but both thank you very much for coming on the show, and hope to see you next time.
Thank you.
Thank you.